All right, let's try and get some domestic voices in. Kunal Bothra of LKP Securities joining in. We'll try and connect with Mayuresh Joshi of Angel Broking in a few minutes as well. But Kunal, let's try and decode technicals out here. Since morning, we were saying that 80.50, 8100 would be a little bit of a resistance band for the market, and that seems to have played out perfectly in terms of the way the markets have been unable to break that range. What's your reading now?
Well, I think, yes, Priyank, I think 8,050, 8,100 seems to be a resistance. But I think the more, critical or the more, important resistance zone for Nifty now would be that gap, on the Monday, which, the Nifty opened, which is now 8220 and, 8,060 odd. So this, 150, 160 point range could be a range where you may see some severe selling pressure. Also you've seen, in the first half, you had advanced decline ratio almost 6:1. Markets, remained comfortably, till at least noon. We were comfortably 1.5%, 1.5%, on the indices, and the mid caps were also outperforming. But in the second half, you've seen the texture completely changing. The advanced decline is now, almost 1:1. So it just goes to show that the kind of selling pressure, the market, could probably invite once it's, trading towards levels of 8,100.
Right. What's your thought on the Bank Nifty as well? Because that's trying to rebound today. But again, if you're talking somewhat of a volatile picture for the markets, and if it's going to get a little choppy, then Kunal, Bank Nifty, any levels that'll probably come into focus?
Again, I think it's a similar range for Bank Nifty, 17,500 on spot as the first resistance, and 17,840, 850 as the second set of resistance. It's very similar to the gap which I'm talking of on on the Nifty as well, which is where I feel a lot of shorts can actually come back into the system, or you may see profit booking, at least from a trading perspective. Priyank, more important, which we have to consider at this point of time is the happenings across the globe, because our markets tend to get in, over the last 1 week or 10 days, our markets have gotten influenced a lot from the happenings across the globe, and I think that could probably play out over the next couple of weeks as well. So till the time we don't see any stability across the global markets, I think it's very difficult to really find any plus points or any bonus points for Nifty as well.
Right. Fair enough. Let's take a look at the commodities today, because that's where we're seeing a fair amount of rebound coming in across stocks. So oil and gas, ONGC, Cairn, some of the top movers this afternoon. Gale's also up about 3% right now. But ONGC and Cairn definitely standing out. What would be your view on these stocks?
Well, I think it seems to be a very short-term bounce, Ava. I think looking at the longer-term charts for ONGC, I think the chart still, or the stock still needs a lot of time to really consolidate. It's very early to take a call on such stocks, especially after these small swift moves, because the larger pattern still seems to be on a downtrend for ONGC. So I would at least wait for a couple of weeks or a couple of months of consolidation or gradual rises. If I see that pattern occurring on stocks like ONGC or GAIL, I think then it could become a good buy from a longer term perspective.
All right, since we're talking about the outlook as far as markets are concerned and the way some of the cues have been panning out, let's quickly get a perspective of from Shiv Puri as well. We caught up with him earlier in the day today to get some perspective in terms of market outlook, and he sounded a little cautious when it came to the market direction, but said if you're a long-term investor, it's still a good time to selectively look at some individual names when it comes to the Indian markets. They're out. Shiv Puri from TVF Capital.
With what's happening globally, one should expect volatility to be par for the course this year.
Right.
You're seeing the after effects of a pretty huge bubble bursting, which is the commodity bubble. And we've seen a few bubbles over the last 10 years bursting. And, when that happens, usually the effects, go on for a little while. So it's hard to say that volatility is behind us. From an India standpoint, I think there's some pros and cons. The fact that this is a pretty significant bubble that's caused pain for companies across the world, for countries across the world, will have an impact on financial flows into India. And also there are some companies in India that made a series of big acquisitions globally and took on some leverage, which will feel the pain of this. But net-net, I think this is a big positive for India, where the commodity prices are today.
When we talk about a more volatile environment, what do you believe are going to be some of those factors that India probably needs to get together? Because in the last couple of days, you can talk about the way the relative valuations really play out and how India really stacks up in the entire EM basket. But somewhere it's also about the macro growth story. It's also about the reform story that's really got a lot of FPIs, a lot of foreign investors excited about India. So in that sense, what will you be really watching out if the markets on a global front are expected to get volatile? Domestic cues again might start getting important.
Yeah, I think the most important thing in India is to watch the capex cycle pick up, is to watch the infrastructure cycle pick up. And so far, there's been lack of evidence of that happening. You've seen some, stalled projects where a little bit of work has started. You've seen some policy announcements by the government. But the fact remains that the biggest lenders to the infrastructure projects, which are the state-run banks, will still have a lot of issues ahead of them, despite the latest infusion of capital. The fact remains that the balance sheets of the developers are still quite strained. So, it's going to take a little bit of time, but for me, the single most important thing is to get the capex cycle going. And that will have a big benefit to the growth rate, because right now it's contributing nothing to the growth rate.
How crucial do you believe would the rate trajectory be as far as the RBI strategy is concerned there? Because that's been the other talking point. I mean, on one hand, we've been seeing what's happening on the global front. We've seen what PBOC also has been doing in the last couple of days. What are your expectations from the RBI?
Well, I think the real effective interest rate in India is incredibly high. It's maybe higher than most other markets anywhere in the world. We've seen, the WPI be in negative territory. The CPI, is now at 4% or thereabouts. And so, I think the trajectory has to be down.
All right, Shiv Puri there earlier in the morning with his perspective in terms of markets and how it's looking going forward from here. But let's bring in another fundamental voice in, Mayuresh Joshi, also joining us to take us through his views on the market. Mayuresh, the start to the September series has been again volatile after August series, which has been probably one of the worst for the last 2 years. The point here is, are we staring at some bit of recovery? Are we looking at more weakness? How do you see the markets panning out in the near term?
Afternoon, Priyank. I think the stickiness for the markets will continue, at least from a short-term perspective. So clearly, the global cues is something that we'll keep on looking forward to. What kind of data comes out of China? What happens with emerging currencies? That will probably keep our markets in check. So probably the resistance that we were earlier looking at 8,600 for the Nifty, the floor probably has come down to 8,200, 8,300. Correspondingly, I think the lower end of the floor might come down to that 7,600, 7,700 odd levels. So we expect the Nifty to gyrate between this range of 7,600, 7,700 on the lower side to 8,200 to 8,300 on the higher end of the band.
Right. Okay. Mayuresh, let's talk at a call on some of the other names as well that are in focus today. I want to get a sense from you on what you're anticipating from the auto pack. We've got some movement in few stocks like a Tata Motors or a Bajaj today. We're going to, of course, be watching out for sales figures next month. And still, of course, a lot of focus on whether or not we'll see that rate cut. What would you be doing with some of these names?
So clearly, Abhay, I think within the auto universe and within the pack itself, the four-wheelers looking a tad bit better than two-wheelers at this point of time. You're obviously seeing monsoons not pan out the way they are supposed to. That means that the rural demand will see contraction. The volume degrowth will be evident in numbers going forward if monsoons disappoints the way it has. So clearly, I think they are priced to perfection in our opinion, both Bajaj Auto and Hero MotoCorp. Add to that, the currency volatility will also have a check in terms of how Bajaj Auto's performance will be on margins. Coming to the four-wheeler pack, I think a lot has been discounted in our opinion how Tata Motors prices performed. Clearly, Chinese slowdown is going to have an effect for the better part of FY16. But their modular strategy is going to work extremely well for them. The new launches they are expected to do is going to yield results from an FY17 perspective. And clearly, I think the margin should start normalizing 2 to 3 quarters down the line. Standalone business is also doing reasonably okay. So in my opinion, I think Tata Motors valuations have become extremely attractive. But Maruti on declines is something that I'll also continue to prefer. Yes, I think the yen movement is something that will affect margins, but a lot of localization has happened for Maruti over a period of time. Clearly, I think it has regained market share. It has in fact increased market share. The discounting per vehicle has gone down. The product mix is quite good. The cash on the books is a healthy sign. So something like a Maruti and a Tata Motors is something that we'll continue to prefer, but clearly on declines. I think I'll not be coming into the market and buying aggressively at this point of time.
Okay, so that's as far as some of these names are concerned from the auto segment, which will again be in focus. But in fact, Kunal, let's try and get a technical sense, because as Abba was mentioning, next week again we'll be keeping an eye for the monthly sales numbers there. Tata Motors has been extremely choppy. I mean, the way it's been panning out in this entire week. It's been a pretty volatile mover. Maruti as well, a couple of the brokerage downgrades coming in the last couple of days. What's your sense when we talk about some of the auto majors, Kunal? Anything on your radar?
Well, I think for Tata Motors, Priyank, I think I sense that it could be probably in a phase of a gradual recovery. It may take a lot of time to really find a very good bottom, and then probably from a longer term perspective, traders or long term investors can look at buying that stock. I think that phase is still quite far away. But I think from a short term perspective, looking at the the oversold signals on the RSI as well as on the MACD, the volumes picking up on the rise in the last 3 days, especially for the stock. Even though you had the stock correcting almost 30 to 40% over the last 6 or 8 months. So I sense that probably from a short term basis, traders can look at buying the stock, looking at a target of at least 360, 365 over the next couple of weeks. I think that's possible. But from a longer term chart basis, I think there still seems to be a lot more consolidation which one needs to see.
Right. Financials, Mayuresh, continue to be a bit of a sore spot. I mean, even today, a weakness that came in even briefly, and even till now, the downward pressure is coming in, of course, from the financial pack. Just to get your views, strategies, public, private sector, what would you be doing?
So clearly, Abha, I think our bias has been towards the private sector guys, and the bias would remain. I think the correction that we've witnessed in a lot of these stocks, Axis, yes, ICICI, I think they've gone back to their lows that we've probably seen 3 or 4 quarters back. So clearly, I think there is nothing to do with the kind of Chinese slowdown that we see on the private space. It's more domestic driven. It's more driven by the fact how credit growth will pan out, and these guys have stood up pretty well. So credit growth has been quite decent in our opinion. Asset quality has held up quite well. The capital adequacy ratios are strong, and all these parameters I think check. Have all my tick boxes checked. So clearly, I think private is the place that I would still be. The correction provides good opportunities. So clearly, if all these stocks decline, I think they become good accumulative opportunities for long-term investors. But again, I think a word of caution. I think you don't need to aggressively rush into these stocks. I think you can park 15-20% of your funds probably at this point of time.
Okay, in fact, just an interesting stat on the ticker as well, that the Nifty swung almost 655 points in a single week is what we're picking up as far as an alert is concerned. In fact, this is one of the worst weekly performance that we've seen in almost 12 weeks, if I got that data right, is what we're seeing as far as the market performance is concerned. Yeah, it's one of the worst weeks that we've seen in 12 weeks. This time around with a cut of almost 3.5%. But more importantly, the kind of swing that we've seen from a high to low has been 655 points is what we've seen from this week's low. Remember, which was somewhere around 7,665. Probably on Monday or Tuesday is what we'd seen that market tank quite badly. And since then, the kind of journey that we made earlier this morning as well, it's been extremely choppy in terms of the way the market movement's been panning out, is what we're seeing. All right, let's talk about some mid-cap names out here. Mayuresh, anything that you've been recommending clients to look at from the broader markets? Because clearly, as a lot of long-term investors have been saying, that these kind of fall in the market are actually good opportunities to start nibbling into some stocks. Anything that you've recommended clients to look at?
So clearly, I think 2-3 stocks, Priyank, that we continue to like, and after the strong correction we saw last week, I think they've come to pretty attractive levels. So Inox Wind is something that I liked even at higher levels. So I think the stock has corrected meaningfully. Our own take is that the kind of capex plans that the company has earmarked upon, I think that should have a sufficient capacity building exercise for Inox over the next few quarters. The top line growth should be quite reasonable over the next 2 years. And again, I think the kind of order book that it is sitting on and the expected sites under acquisition hold it in good stead. So Inox is something we'll continue to like and prefer. Bajaj Electrical is a long-term favorite of mine. So clearly, I think the kind of E&P performance that Bajaj Electrical has given in the quarter gone by, it's showing signs of a turnaround in that segment, which is clearly underperformed, and that has been the cause of misery for Bajaj Electrical over a period of time. So I think from EBIT losses of close to 84-85 odd crores in FY15, they're expecting EBIT profits of around 90-96 odd crores in FY17. This will clearly swing the company's fortunes on a consolidated basis, with consumer discretionary and the LED segment chipping in. The third one that we probably like at this point of time on declines is Garware Wallropes. Company is into synthetic cordage business, industrial product designs. Our own expectations in top line growth is close to 12% on a CAGR basis over the next 2 years, 18% on the bottom line. Margins should stabilize between the 10.8-11% mark. And clearly, I think the kind of interest rate reduction that it has done in terms of debt going down to 45 odd crores and ROE is expanding to 13% from 9.4. That augurs well for the company, and the current valuation of around 10.8, 10.9 definitely augurs well for the company. So I think a few of the stocks we like, but again, I think a word of caution, Priyank, declines and small proportions at this point of time. You don't need to get aggressive.
The logistics space is a bit active today again, Mayuresh. When we saw the crash, we had a lot of experts say they'd stay away from any of the newer themes and stick to safer bets. What would you do with, for instance, some of these logistic counters?
So I think Transport Corporation is something that we've always liked. We continue to like that. The four main business segments, I think the two critical components for them is the XPS and the supply chain solutions. Sufficient amount of capex is been done, 500 crores earmarked over the next couple of years, which will ensure that their overall market share from these two segments grow from 56 to 61 odd percent. Clearly, I think our own expectations in terms of earnings growth is 17 and 21% for these respective segments, and freight and seaways contributing to the rest of the revenues for the company. Asset light model, again, I think the turnover ratios have been extremely strong, ROEs are extremely strong. So any decline on Transport Corporation, I think, is our best preferred bet, at least from the logistics space at this point of time.
All right, just a few minutes left on the markets to close for trade, and it's probably going to be around an 8,000 level close that we're seeing. Let's pull up the Nifty once again for you and get a quick mention there. It's been looking a little tentative in terms of the way markets are now panning out. It's higher by 47, 48 points, but the last half hour or 1 hour of trade, things have got a little pretty choppy in terms of the way the performance has been panning out, is what we're seeing. The weakness has been evident in Lupin today, down 2.5%. Coal India, some of the banking stocks started to erode a little bit in the second half of trade. Bank of Baroda, PNB, IndusInd, Yes, Kotak Mahindra, all these stocks started to see a little bit of a decline and hence added to more pressure, is what we saw. Kunal, a quick call here on two counters that have been in focus in the last few days. You've got Kane, which was in focus a couple of hours back, was up 7%. It's up nearly 4 right now. And Vedanta. And also remember, these two have been hammered in the last 1 year or so. Any technical thoughts? Are you seeing somewhat of a technical rebound for these two names?
Well, very difficult to say, Priyank, from a longer term perspective, because both these stocks are actually going through almost more than 12-month kind of correction, and generally you don't see such corrections getting taken out by a small bit of recovery, especially for stocks like Kane and Vedanta. I expect that till the time you don't see a larger bit of consolidation in these stocks, it's very difficult to really take a bigger call or a buy call on these trades, because it's possible that even though the indicators like RSI, MACD, they can keep on being in the oversold territory, and the stocks can actually keep on correcting further. So it's really difficult to call a bottom for these stocks. I think anyone who's looking to really look forward for long trades, I think needs to wait for some sort of recovery. Even a shorter term pattern of a higher high or a higher low in these stocks can actually signal some sort of a short term uptrend. But I think till the time you see a lack of it, it's very difficult to take a long call on these two stocks.
Okay, just about 40 seconds left to go for closing today, and it looks like all in all we're still just about managed to close about to 8,000, about the 80-50 mark.
Yeah, that's right. If you look at the way the markets are panning out and the kind of closing that we're picking up right now, it's you're managing to just squeeze out some bit of gains on this first trading day of the September series. What we're seeing right now, 7995 as we speak. As far as the index is concerned, in regard to the way it's panning out as far as a couple of the stocks are concerned and where we got some bit of support coming in today, you had a couple of the stocks from the metal space that were buzzing. You had Vedanta that was up, then you had ONGC providing support, 5.5%, ZEEK in India, NMDC, HCL Tech, Bharti, Bajaj Auto, Infi, Bosch and NTPC all seeing some good gains is what we noticed. The closing though, exactly around that 8,000 level is what we're seeing so far. Lupin, BPCL, PNB, Ambuja and Sun Pharma, that's where the weakness was, and these are some of the stocks that actually lost out in terms of trade today. Bank of Baroda, IndusInd, Yes Bank, Grasim and Kotak Mahindra are a couple of the other stocks that lost out. The interesting bit out here was that some of the underperformers in the last few days actually got a little active is what we noticed, maybe like ONGC, Vedanta, Kane India for that matter, on the back of that overnight rebound in oil prices. Got that stock excited. Infi and HCL Tech really stood out from the IT pack, getting some good interest today. So those two stocks managed to see some decent outperformance is what we noticed. But all in all, if you look at the way the closings really played out, we'll wait for the adjusted one to come in. But one thing's pretty evident, at least looking at today's move, that 80, 50, 8100 range played out perfectly in terms of what the resistance has been panning out as far as the Nifty is concerned. So that clearly becomes your near-term range to watch out for as far as markets are concerned. You'll have to break out of that convincingly to probably just get some more confidence and momentum back into the market.
Absolutely. Well, mid-caps today also saw cool off from the day's high, but didn't do so badly overall. In fact, a whole host of stocks, particularly from the construction infra pack, logistics, those are a few spaces, realty as well, that did see a lot of action that was being built in today's trade. Some of the top movers when it came to the mid-cap space, running through a few names. Vakrange has been moving up consistently. In fact, even today up 10%. Future Consumers was up 11 to 12%. Kolte Patil was another one there that was looking good. Gati Transport Corporation, as Mayuresh was also talking about. And a few other names as well that were on the upside, like a Bajaj Electrical, for instance, or Cargo Logistics and so forth. So there's still plenty of action. Captain Point Labs was up about 6% or so today, for instance, as well. In today's trade. On the downside, though, we just had a few stocks that continue to sit out, and those were a few of the financials, for instance. Didn't see too much activity in today's trade, particularly even in the broader markets. Mayuresh, going ahead now, just to touch base once again with what you'd recommend, particularly as you said you are expecting some amount of volatility to continue, and what would be some of the pockets of the market you'd look at, if at all, at a time like this?
So selectively, Abhay, I think the private banks, as I mentioned earlier, is something that we continue to prefer in these markets. IT and pharma selectively is something that we like. So the top tier IT names is where our belief is that growth should start coming back over the next 2 to 3 quarters. Quarter one obviously was an impediment in terms of how wage hikes had taken place. The visa cost probably taking a hit on EBIT margins for a lot of these IT companies. But clearly, I think looking at the client mining exercises that a lot of these top tier names have done, the kind of discretionary spending that should come through from the US markets, looking at the economic data there, European markets stabilizing at least in terms of the IT spends going forward. I think all of that should hold them in good stead. So TCS, Infosys, HCL Tech is something we'll continue to prefer. And within the pharma space, I think something like a Sun Pharma on declines, Aurobindo on declines is something that we like. I think they've got a huge amount of generic share that they can actually exploit going forward. And yes, I think Sun would be having integration issues, remedial issues for better part of FY16. But we're expecting strong bounce back to happen from FY17 numbers in terms of their core ROEs rebounding back, EBITDA margins normalizing. And similarly for Aurobindo, I think the 2 acquisitions that they've done, along with the potential market size for the ARV market, I think that should hold it in good stead as well.
All right, so that's as far as a couple of these stocks are concerned. Kunal, you want to share your top picks as well in this market and what you'd be working with?
Well, yes, I think a couple of stocks which look attractive, Priyank. I think first from the pharma space, I think I like Torrent Pharma. I think the stock has been on a very strong uptrend. I think if you look at the last 2 or 3 years, I think the stock has given a very strong set of returns, even though you've seen the very good volatility in the indices of late. I think the stock is still holding ground. It's almost very close to its breaking its all-time highs once again. So I believe this could be one of the good stocks, probably good hedge in terms of defensive stock in portfolio. I would look at least a 1750 to 1800 kind of targets on Torrent Pharma, given a time frame of at least 3 to 6 months, keeping a stop loss of almost 1400 on it.
All right, so that's as far as some of the picks out there are concerned. But, Mayuresh, before we wind down the conversation, just one quick comment as far as the expectations from Jackson Hole are concerned. This time around, it's unlikely that we'll see the kind of fireworks that we've seen in the past. But anything that you would be watching out for, anything that's probably going to be important from the emerging market standpoint?
So clearly, I think, what has happened with the emerging market scenario, specifically in terms of how the currencies have panned out, I do not expect anything to come through, at least in the September policy, as far as the Fed minutes are concerned. So clearly, I think they will also be put on a wait and watch out how the emerging data pans out, specifically in terms of how currencies are panning out, because a lot of flows are moving back into the dollar, and that's probably not a very good sign as the Fed would see it, in my opinion. So clearly, I think it's a wait and watch mode for the Fed. The economic data internally has been extremely strong for the US markets, but I think the emerging markets would keep the Fed rate hike in check. So in all probabilities, December or post that is when I expect the Fed hike to actually raise rates. But before that, I think the September policy, I think not expecting any rate hike to come through from the Fed.
All right, gentlemen, thanks so much for joining us this afternoon. Have a good weekend. Let's take a look at what else is lined up going ahead. Mithali?
We were just talking